Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Tuesday, March 3rd. I'm Phil Streible, chief market strategist at Blue Line Futures. So massive volatility overnight and futures contracts capitulating about 10-15 minutes ago here. So let's get you set up for the trading day ahead. Gold futures fell after 4 straight days of rallies as traders really weigh in. It's the escalation of the Middle East here and the prospects for a stronger dollar. Look at the dollar index. Look at 10-year treasury yields and look at the inflation expectations. You can also look at the Fed interest rate cut expectations. So stock futures also solidly lower here, and the global bond market's falling as fears that Trump will do whatever it takes and Iran will vow to fuel this energy price inflation escalation going on. So futures are accelerating here lower on reports that Monday evening drones striking near the U.S. Embassy in Saudi Arabia, really pulling Saudi Arabia into the widening conflict. So you see oil prices hitting $85 a barrel. This is Brent crude oil for the first time since July of 2024. So European natural gas, they also surging about 34% with some uncertainty over how long exports will be halted from the largest LNG exporter. So you look at natural gas prices up about 15 cents. That's about a 5% rally. Crude oil prices up about 8%. You have heating oil up about 14%. Gasoline up 6%. One thing I did was I did local television yesterday. And something that you could tell people is that every $1 move higher in crude oil prices equates to about 2.5 cents at the pump. So you get a $5 move higher. Well, you could do the math here and you're going to get significant movement higher. You get a $10 move higher. You're looking at a 25-cent move here at the pump. So it's important to keep those gas tanks full here at the moment. So looking at April gold overnight, quite a wide range here. Futures contracts getting a low as 50.81. High is 53.94. So that high was in the overnight session. And it seems like when things were really escalating, that's when a lot of these futures markets in the overnight session, right around like midnight, started to crumble here and sell off aggressively. And we saw this futures really roll over, and across the board here, everything from Bitcoin, all your foreign currencies are lower here, all your metals across the board, even the gold market at the moment. Aluminum futures pushing higher. Perhaps there's some supply demand impact or some logistical issue as far as moving aluminum around, or suppliers just trying to get a hold of that product at the moment. So you look at April gold, again, the 10-day exponential average here, moving average, about $155. But if you look at that overnight range, it's about $300. So 2 times that volatility here. So gold volatility sitting at 34.83. May silver, high of the overnight session, 91.60. Lower the overnight session, 78.06. Down 8% overnight. A lot of people are wondering why I'm interested in these 100-ounce silver contracts, because when you get that much volatility in the market, even if you were doing a 1,000-ounce contract, that's going to be $13,000. If you're doing the 5,000-ounce contract, that's going to be $65,000. If you do the 100-ounce contract, you're going to have a $1,300 range. So you could see that position sizing becomes paramount in these markets. And I really believe that silver futures right now are more in this price discovery phase rather than a trending phase at the moment, looking to find their footing before identifying that next leg in one direction, higher or lower. If you want to look at the silver futures, look at that range from that $90, the $97 down to about the $70. So it's about a $27 range here back and forth on his futures contracts over the past couple weeks. Looking at the ETF flows where they were selling gold, silver, platinum, palladium. The gold ETF flows unchanged from the previous trading session, taking it down about 42,000 troy ounces, and total gold held by ETFs rising about 1.9%. The question is, will they buy this dip here on these futures contracts? April gold, 50.81 being that low. Perhaps if we close in near that 5,000, you might see much more aggressive ETF buying take place. You look at gold advancing 23% this year, tacked on 0.8% here yesterday, but slipping about 2% here today. Silver ETF flows declining about 0.4%. Year to date down 3.8%. The ETFs cut about 3.37 million troy ounces. Platinum holdings decreased for the 5th straight day. Something to look at. The overnight action here from yesterday to today on the gold silver ratio, 64 to 1, telling you that silver Again, price discovery mode, trying to find some trend, trying to find some footing, really looking at some of these outside markets like copper, platinum, palladium. Copper futures here down about 2.5%, 579. They really were under pressure here yesterday. Now, copper futures being one of the lower volatility of the metals markets, and we're going to really want to look for that as far as any kind of recovery. Will that help boost that silver market? And then look at the platinum market down $269, closing back in on that 2,000 mark. So you get the other markets here, stock futures, well, they were hammered at one point overnight. The S&P 500 down about 1.6%, the NASDAQ down about 2%, the Russell 2000 down about 2.5%, and the Dow down about 1.7%. You go out to the outside markets, one of the best performing markets has been the emerging markets recently, and emerging markets slipping about 5% overnight. You look at the earnings front, 481 S&P 500 companies have reported, 73% have beat analyst expectations, 22% have missed. No one's really going to be paying attention to that at the moment. The economic data coming out, no one's really going to be watching what's happening today. You do have two Fed speakers coming out, total vehicle sales for February due out today, but it's really 3 or 4 more economic data reports starting tomorrow with ADP, the non-farm payroll. That's where things can really start to find and stabilize themselves just a bit. You go to the rate cut expectations, well, we're on stagflation watch. That's where you got rising inflation, declining growth, and that's where the stagflation risk comes involved. So you look at the March meeting here, only a 2.7% probability they'll cut rates. April's 11, June is 31, September they are still fully pricing in an interest rate cut. Perhaps they've got it measured out as far as the length of how long this conflict could take place and prices to finally come down and normalize. You look at the dollar index here, strengthen as the oil spike really causes traders to dial back those Fed rate cut expectations and those bets here. 10-year treasury yields, well, 3.96% yesterday, 4.10% here today. A big hawkish move in the S&P gamma exposure. Well, that's negative, really amplifying some of the downside risk with the S&P. Basically, what's happening is though gamma exposure, they're trying to have to sell futures here against any of those put options that were sold off to other retail investors and other institutions. So the market makers and the dealers, they've got to press things one way or the other. You go to WTI crude oil futures, well, they're pushing up here at 77.14. High was 77.53, up about 8% here. And you go to Europe, well, those stocks headed for their biggest 2-day drop here since that April turmoil with the Middle East conflict here and the tariff turmoil really caused by the inflated and the intense energy prices here. So banks lag, the energy sector outperformed. And then you go over to Asia, the MSCI Asia Pacific Index dropping 3.3%, on track for its worst 2 days since April. And South Korea's Kospi, well, that plunged 7.2% here. Its worst session since August of 2024. The Kospi was closed yesterday, so you get the reopening. Bitcoin futures down about 3%. It's just a sea of red across the screen here. Surprisingly, you've got some of the agricultural products all pushing higher, with beans leading the charge up about 14 cents here as of this recording. So if you guys got any questions, it can be another really busy day here setting up. Give me a call, shoot an email to info@bluelinefutures.com. If you want to get involved with the silver market, that 100-ounce contract, I believe that gives people an opportunity and a barrier of entry. Now remember, risk of loss involved with futures trading. The futures contracts, it's just important to get that position sizing right. You got futures contracts correcting back down to some levels, or if you get some normalization in the market here and you start to get that upward momentum pushing back higher, I think futures can quickly, swiftly move back over that triple-digit mark. So again, you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.